Wednesday stock list. Guys, I came to you today to kind of just touch some bases with you guys. If you haven't had a chance to watch this show before, please don't forget to like, subscribe, and also hit the bell icon so you can be updated on our latest content when we drop it. If you haven't watched the Monday show, make sure you go back and watch that show. It was hilarious. Got a lot of good feedback from individuals, especially on a lot of text messages, and also from people on Spotify. So I definitely appreciate that for you guys taking the time out to watch the Monday show. We're just really excited about it. Today's show is about finding the next thing. Now, I'm always on search for the next thing. I mean, if I couldn't do anything else, I'm not a gambling type of person, but I do want to find out what is the next big thing I can get my hands on with as least amount of money as possible. So in today's show, I'm going to go over a couple of 3 stocks that I actually have my eyes on, that if circumstances are to change, to me, these may be my next big moves. Now, again, don't forget to watch the disclaimer at the bottom. And if the disclaimer always tells you, just understand, do your own research. Don't take anything that I say. Look at everything I say as a grain of salt. Again, don't take anything I say without looking at it as a grain of salt, because I did my own due diligence. I did my own research. It's subjective. It may or may not even be something you want to look at. If you have a financial advisor, he may tell you, no, 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 no. I understand all those things. But today on the show, I'm going to go over some of these stocks, which is Bumble, Lucid, and most importantly, what you call GEN restaurants. Now, again, these stocks all come because I'm looking at exposure. If I have the opportunity, I'm exposing myself to some risk factors, which means for me and many other people means there's an opportunity I can lose every bit of dime that I put in these companies. And I get that. I fully understand that. That's the reason I'm making this decision, is because I have the opportunity to either have a big win or a wrong win based on my research. So let me jump into one right now, in case you guys don't know. And I'm going to jump right into it when it comes to GEN restaurants. Again, I missed a lot of the restaurants opportunities in the last 5 years. I just truly missed them. Either what I mean by miss was that I was already in positions at the time some of these stocks came out. I was not part of at all some of these stocks that had came out in the last 5 years. And one of them is Chipotle. The other one was Starbucks. I was not there when these stocks became on the market, and because I had other things I was in position-wise. So I was not able to go ahead and just grab that. But GEN restaurants is one that's curious, because especially right now with the K-pop movement, I had the opportunity to actually go to their website. From going from their website, actually, this is something that's unique, and not everybody does this, but I actually called some of their stores that's right by them out in California. Called 2 different GEN restaurants out in California, since they play K-pop doing it. And I actually asked the stores, how did the parking lot look? All I want to know, I'm asking the person at the front desk, is the parking lot full? Is it not? When's your fullest day? These are the questions that I like to ask. I mean, if I'm going to invest in something, I want to call the neighbors. And even though I go on Google Maps, figure out who's right beside them, and I contact them and ask the question. It's a restaurant. When is their busiest days? When days you think? And I got some cool young people that had the opportunity to talk to me and tell me just straight up. I found out that one location has a nice size traffic, especially on Monday through Friday. Then I also found out it's packed on the weekend. Only one of I called 3 total, to be honest with you, and one of them said that Monday and Tuesday seems to be slow at that place, but as it goes towards the weekend, Now for me, I'm just doing my due diligence. That's just one thing. I don't live there. They're not inside where I live at all. I'm in the Midwest. Those companies out there right now, out in the California area and expanding. They did their IPO. I didn't have any exposure at this particular point to restaurants at all. And we know coming out of the COVID situation that restaurants are having a little slump right now. So, there's certain restaurants that don't really have a slump. I mean, everybody knows if Chick-fil-A went public, most of us probably would hold that in our portfolio. That would probably be the next big thing. But at this particular point, that's not public. So, there's no signs of Chick-fil-A even offering. But I do know that GEN restaurants actually did offer. So I want to find out exactly, is this one I should hold in my portfolio or not? It actually was priced at $12 a share before it started trading in the month of June. Here we are in the month of July, and it's trading at $19, above $19, period. $19, I think, 7 cents. Well, how does that play out for me or you? Well, the reality is that when you have a situation where you're looking at a stock and you're doing your due diligence, you're calling the neighbors, the places around there. Again, back in the day, you can use the white pages. You can find people's name in it based on the zip code, figure out who's really close, ask, have they ever been there? But that's like telemarketing. I'm calling from a research company trying to find out. Those days are over. That's all those things I was able to do in early 90s, early 2000s. You can call, grab the white pages. But when's the last time you've seen a white page delivered to your house? Think about it for a second. I haven't seen one in a while. Matter of fact, since where I live at the last 5 years, I haven't seen the white pages. Now, if you got a business address, every now and then you get a white pages. But overall, doing your research. Here's the thing: the reason they did the IPO was to open up more restaurants. Question is, would they ever move to the East Coast? Would they ever move to the Midwest, where you can actually see this? Interesting concept. They're actually navigating off of the pop culture. I mean, the K-pop culture. So they play K-pop when you're in a restaurant. It has that Asian style, but it's also a fast food chain. But when I'm looking at exposure, I got to ask myself this question: do I have access? Because before it started trading at $12, now it's trading at 19, and you've seen that's a nice size bump. Now again, it could have started off at 12, peaked all the way down at 5, and at the same time, you don't know. However, it is still during that time where it hasn't been the owners of it that did the IPO. They're still doing that opportunity where the price hasn't really dipped yet. So in about 6 months, I'm gonna find out really what the GNK restaurants really is about, because I'm gonna see that price decline as they come out of that unlock period and they start distributing their shares, and the owners of that. Now, what makes this stock unique though is that it only has 3.6 million outstanding shares. So it doesn't have a lot of outstanding shares, which means it has a low when it comes to outstanding shares, and the volume is extremely low. So volume moves can be really crazy. That's why it can jump. Whenever you have a low volume stock that does an IPO and kind of hiding out there and it's not really getting a lot of buzz feed, that makes it interesting to me. I mean, am I willing to put up, about $2,000 to take a position? Again, I can't overexpose myself, because at the end of the day, I truly got to take on this risk. I mean, risk for me means I put up all the capital. I must oversee my investments because I'm exposed. That's how I look at risk. At the same time, this is an opportunity for me to have a long-term hold in restaurants. Now, will I be able to be successful with this one? Don't know yet. But what I do know is that only having 3.6 million outstanding shares, um, talking to some of the people that's in the community that has business right by them, knowing that pretty much the weekend is pretty busy over that place. One of the person I talked to, her name was Samantha. She says I eat there at least once every 2 weeks. So getting some feedback from the neighbors that I talked to, and they pretty much said the food's not bad. She even gave me a suggestion what I should get if it was here locally, but unfortunately it's not where I live at. But it's an opportunity to have that. Here's another one. I'm going to jump right in there and talk about this. This one was a SPAC deal. Now, if you're not familiar with SPACs, you always got to be concerned about a SPAC. Let me just be honest with you. Anytime you're dealing with SPACs, you got to be concerned with it, because they're overpriced. However, this is an interesting situation, because we're still living in times where across the world, there's a big push for electric vehicles. Power grid can't handle it, but that doesn't matter. It's a stimuli. It's one of the things that the government is stimulating, which means they're willing to put money in the area that they know is not necessarily going to be uh, productive. I mean, during the Barack Obama's administration, one of the things that he put a lot of money in a lot of green energy. Almost 87% of all stocks they gave money to from the government, taxpayers' money, yours, mine, anyone else who paid their taxes. Guess what took place? Those companies exploded. They're not here today. Here we are. I mean, just a couple years after that, we have the current president Biden. This is, we went through 4 years of Trump. Now we got Biden, and before that was Barack Obama's administration. A lot of those companies he funded during that 8 years didn't kind of work out. I mean, that's people say, well, they were startups. That's normal. Well, unfortunately, taxpayers foot the bill for that, and you're not going to get that money back. So here we are again. We're looking at a situation in Lucid. And one of the things I know about Lucid is that just as all the EV models, car places had some type of a slump at post-COVID, we know that the power grid can't handle it. We know that there's been recent activity. You can definitely check that out, going before Congress and stating that the power grid is not sufficient in order to actually provide more and more EVs, especially if they did it. How many houses they will have to knock down, and how the power grid is really not allocated to do the EVs, but yet they're still stimulating this. And since it's stimulate means government's willing to fund it, government willing to pay the backing on future generations paying that money back. Well, here's an interesting thing. There may be an opportunity. So I looked at Lucid. I know it's a SPAC deal. It always concern me. Not willing to put that much money into that one, but unfortunately, not willing to put that much money in, but unfortunately, there is an opportunity, because you're looking at now, we know that they had to have low interest rate in order for the EV market to really go back to where it was post-COVID. They all function on lower interest rates. Well, we know in the third and fourth quarter, they're going to be hikes, which means there may be a little opportunity for me to see if this fits into my portfolio at less dollars, because I don't have to spend more than $800. See, if I'm going to think about GEN restaurants, that's going to cost around $2,000 for 100 shares. But Lucid, it's not even half that. So it puts me in a situation to say, can I put $800 into it? And is there an opportunity for me to be able to make 20% return on my own money? Now, that question is going to be up in the air, but we do know back in March that they had a big issue not meeting the standard for deliveries. This would actually make that stock, on top of everything else with high interest rates, tumble. Now, rates are going up, they're not going down. And that puts us in a position to ask this question to ourselves. And that's an important question to ask. And that is, whenever you're going to take on risk, add to your portfolio, which I like to call integrated. Other people use the word diversification, which means work separate and apart. I think about integration, which means like a Christmas tree. Put them branches on the tree, it all points to me. That's how I look at integration. Same way the street is integrated into getting to my house and my job, just like yours is integrated to get to your house and your job. All integration here. Now, I'm going to be taking on risk if I decide to spend $800 in this area of business. Now, if I'm correct, I may see possibly a 30% return on this, but if I'm dead wrong, this could be an explosion of capital because this is a SPAC deal. One of the things about SPACs is they raise a bunch of money, and in the process of them raising a bunch of money, everybody who gets in early on that SPAC makes the most money because they get then from that particular point make way more than the person who buys on the open market. So the question is, now that it capitulated back down and they had some slow deliveries, I mean, you do see Lucid Motors out on the road. We see that and you see with Revyon, you see with Lucid. This is the competition of it, as you know. Now, since Revyon then went off and took off, that was on our watch list, my watch list earlier. Now I'm looking at, okay, can Lucid. Now we also seen one of the things I talked about before was NIO, which is the which is in China, is the EV model maker that was competing with Tesla early on. It was supposed to be the Chinese version of Tesla. They bumped up because back when I was doing the due diligence on NIO, I decided not to put it on the list, but that's trading today at $13 a share. Lucid's trading around $7 a share, and there's an opportunity. And we've seen that when it came to NIO, it was actually down. And that wasn't a SPAC deal like Lucid is. So Lucid, and one of the other things that Lucid has that the other ones don't, is that Lucid has an opportunity to be a situation that makes it may not pan out, but being at SPAC sometimes take advantage of so many people, and people lose money in SPACs. That's why they always have that issue, but they have to raise the capital. Then when they raise that capital, then they go out and buy something. Well, Lucid was a merger that took place from the SPAC, from the money that they raised, and they was able to acquire something before that time ran out that they had to give everybody back their money. But now I'm looking at this regards, being that I know the rates are high, and being that I know that EVs, and I understand that restaurants need low rates. I'm a growth guy. I'm a long-term growth guy. I have the belief, just like most people have, for long-term. I'm not thinking about short-term, but I am thinking about, if I deploy this money, can it make me income in a 12-month basis, over 24 months, even 36 months? Can it help me meet my obligations, especially the responsibility that I currently have? Can it really help me? If that is the case, then I want you to understand this. Whenever I'm looking at anything, and trust me when I tell you this, I have to do my due diligence. Well, I kind of looked up and seen exactly when it comes to Lucid Motors and did my due diligence. And one of the things I found out is this. It's very interesting, and most people don't do this, but it's always important to do it. What I did for Lucid is I actually called some of the competition for Lucid and even some of the parts places. And what I found out was they are having certain issues, which means it's in favor for me. Other people may not take that as the example, because it's dangerous if you find out that a car manufacturer that said NVs is having certain issues with getting certain parts. But that's just not anybody right now. When it comes to components, everybody's kind of having this issue right now with getting certain components that they need. It's just not Lucid. However, it's a SPAC deal. So that means it may be an opportunity for me right now that by the time, since nobody's really paying attention, the opportunities sometimes, not all the time, but sometimes opportunities work out this way. When a stock is not in favor, it's an opportunity for me. Other people wouldn't do that because they're looking at more of a safe opportunity. But I looked at Gen Restaurants, low volume. I'm looking at Lucid. I see that NIO, which was another EV company, dipped down to around $8 a share. Now it's up over 13. And if I would have got those shares, NIO, which is NIO, that's a Chinese version of Tesla, what they say, but it's not. It's just a Chinese company. But if I would have acquired that, I could have made $500. And that would have literally only took over less than 90 days. Made $500 on 100 shares that I would have acquired. You would have taken that $500, divided into $800 that it would have cost me, and you would see that that's a nice return. Now, that's a short-term return if I sold out. But the interesting thing is that even if I didn't sell out and I carried that over, there was an opportunity still to make about $350 on top of the $500. And that opportunity, unfortunately, was missed by me. I can't sit here and tell you guys no lie. I missed it. How come? I was already in a situation that prevented me from actually taking any position in that. But I did have it, and we did do the due diligence and understood Tesla's too expensive. I missed that opportunity. I just got to be honest. There's no way in the world you're going to get hit 100% batting average when it comes to building your own positions and portfolios. But again, the fact is, it helps us to know that when bad news comes out, it's an opportunity for long-term holders. I will be concerned though, for me, because at the end of the day, I'm not going to buy 300 and 500 shares of Lucid. I'm not going to forget it's a SPAC, but there may be an opportunity to integrate that into my overall fund at only costing less than $720 to really go into it to see if my hypothesis is correct. Because now that you got a peak in NEO, now you got a little peak in Tesla, now you got a little peak in NIO, and now there's a little peak in Revyon, went through the roof. Again, that was one that was on the list that was really getting beat up. If I'm not mistaken, this may be another opportunity to just increase the portfolio because it cost me less than it would cost me to buy, Ren restaurant or Gen restaurant. So it cost me less, $2,000 versus $720. Hey, that's a no-brainer. Less money. When it comes to me, I always look at this. Can I get more for less? That's the key. Whenever you're gonna trade money, can I get more for less? I don't want to be, if I'm gonna be exposed, I want to spend as least as possible to be exposed with a better upswing. Well, here's the third one. This one here has always been one that I actually enjoy. And here's the thing: when it comes to date naps, for whatever reason, when it comes to date naps, you got this Bumble, which is a woman-led company. Now, the problem with Bumble, though, which helped Bumble price drop, is because in March of 2023, I had this on my watch list, been up there for some time now. Bumble did something that most of us would say, that's kind of shady. What does that mean by that? They offered a second round of shares, a second offering. And they offered it to the individuals who are some of the founders and inside core people, just a separate offering. And they did this. Now, that means that anybody who's paying attention, that's called dilution. So if you already had Bumble, they did offer some second shares. And now you're saying, I got diluted. Well, that's an opportunity because Bumble is still when I have a list that if it wasn't underneath these high behind interest rates, and as you know, third or fourth quarter, the Fed said they will raise rates. That means that there may be some play. Bumble continues to be one on the watch list. And it's one that I do like from a standpoint because when it comes to dating apps, I mean, this is the second one. This is the second dating app that has some time to do it because the main one, Match.com, this competes with. And it's the woman, it's like Dave. I won't say David and Goliath because that'd be a bold-faced lie. But what it actually is, though, it's men against women. You know how they do it. They got to put the men against the women. Jessica Albi's part of this company as well. From my understanding, as I continue to do my research, she's still one of the owners. She hasn't departed yet, but it was a second offering done by the majority owner of the company. Now, how does that play out when you're looking at a situation at any stock? You got to know these points. I mean, if you have a financial planner, that's his job. But I serve as my own financial planner. I don't represent nobody else. That's why I tell everybody, look at the disclaimer. Don't again, you got to do your own due diligence. But I have had the opportunity to just be listening. And I ask women, well, do you like Bumble over you like Match.com? Match.com is focused like on the male's point of view. Bumble gives the women all the control. And for whatever reason, that's the current culture. The current culture is, women, I got my own body. I make my own decisions. So that's a play on the culture because the culture we are right now and allows me to say, they offer these second shares. There's still an opportunity for me. I left it on the watch list. Bumble was higher when I first put it on the watch list, and now it's down. And it's treading down. And the reason it's treading down is because of this. We got to understand all these three stocks I'm talking about right now, in case you don't know, all function off of lower interest rates. So I am looking forward to the Feds hiking these rates up because it allows me an opportunity to buy these stocks at an affordable cost. Again, this is a little bit cheaper because right now, when it comes to Gen restaurants, GENK, that is actually trading at $19 a share. That's that's $1,900 for 100 shares. Well, Bumble is less than that. So that's still close to $2,000. And then when I look at Lucid, that's only less than $720. So can I get more for less if I only have that amount of money? And one of the things that I always do is kind of look at stocks is based on what I have access to. Now I get it. People may look at it a different way, but I look at three things always. One, can I increase my cash? Two, can I bring down my average? And three, can I make a profit on it? That's it. I don't have a position like other people have a position where they hold stocks and they're not thinking about income. The only reason I deploy my natural resources, that's right. The only reason I deploy them when it comes to money that I have set aside is because I can't get the same thing. I cannot get the same return at all at the local bank. I don't care if I put the money in my checking account, wait 30 days, then I put it in my savings account, wait 30 days. I mean, I may get from the difference from moving into checking and savings after 60 days, I may get 13 cents if I'm lucky. Then if I move it to a money market account, I may get give or take. It's only, you think about $2,000 versus $720 for the other $2,000 versus that two stocks around 2,000, one stock around 720, and you do the numbers on that. You say, I may get, okay, let's say $2, just hypothetically speaking. Okay, unless it's at a credit union, regular commercial bank, they're not paying that much. Credit union, you probably can't find credit unions that are paying a little bit better right now. Just to get a little hint. Now, those are things. So I got the money market and checking. However, if I take this $720 and I take this $2,000 and I'm able to be right, I'll make more on the transaction than I would if I just set it in the bank and just let it sit there. Again, at the end of the day, I don't look at my savings account as child support for checking. It's not for my debts, it's for my income. It's my only way to be able to make more money than just me using, it's only 24 hours in a day. And if I work 10 hours or 12 hours, I mean, there's only so much I can do. So can I get my money to be like my partner and work for me to generate some income? That way, all my income doesn't come from these. It can't come from these. I got to be able to use this too. I'm telling you. Now, this may not be the best thing for you. That's why I always throw the disclaimer out there. Whenever I'm talking, I keep trying to tell you, disclaimer, disclaimer, disclaimer. Do your own research. But here's some of the things I do. I go on the list and talk to the neighbors of those stores. So like I said, when it came to GEN restaurants, I called the companies right beside them on that same block. I pulled up Google, typed in the address, seen what was around them. I called across the street, I called them, and I talked to other restaurants and talked to patrons and was able to get some information about how it looks because they're not close to me. I can't drive up. The local community is the best way to get some answers because at the end of the day, you call a place, says, I just have a question. This may funny. It may sound funny, but I need to know this answer. As I'm looking at this company here, how is the food? Because I know you're close by. And I just very honestly tell them because I'm doing field research. I'm doing my research. I refuse to buy any stock and I don't talk to the neighbors. I want to know, is this place even physically there? At the same time, yes, people like to go to Google, type in stuff and then see what other analysts are talking about. But those other analysts, they get paid to talk about that. I want to talk to the people who don't get paid because people who get paid, they can write good articles. They can help you. You thinking like, oh, okay, yes, thank you. But here's the thing. They get paid for being analysts. They get paid. They put information out there. They get paid. These people are not getting paid. They just going to tell me the food they're discussing. I was there last week. It's nasty in there. When you don't have a chance to actually find out specifically, very, very specifically, because you don't live close, you depend on the local community being your eyes and ears. Okay. I made sure I did that. I talked to women and I wanted to know between Tinder and everything else. One of the things I find out from talking to young ladies is that they actually do use Bumble more than they use Tinder. Tinder, they said, is still cool, but Bumble's a little bit better. There is a fee they got to pay though, but they control the market. So I thought that was interesting. They have all these different dating apps and I'm looking at, okay, since that's the culture, meeting online, what's the best way I can do it? And if I'm willing to spend that money or not. Because if I'm not willing to spend that money, it's a no-go. But at least I knew it because I did my due diligence. I wanted to go above and beyond what the internet's saying and want to know what the community is saying. And I got some good information. Even though right now, all these stocks are growth. Since they're growth, that means that they need lower interest rates and they're at a price right now that is lower. Keep in mind that they IPO'd. The only one that IPO'd recently, which was in 2023, is actually GEN Restaurants, GENK. That's the only one. All the rest of them IPO'd back during the COVID situation. So you go like 2019 going into 2020, 2021, these stocks come out. Now they got a little bit of problems. So that's what I want to do. I want to make sure, don't forget to look at the body because I put some information in the body for you guys. But at the same time, you got to, whenever you're going to handle your own money, you have to do that research. I know it may not be uncomfortable for you, but I make sure I do what I need to do in order for me to feel confident. Not that I'll be necessarily picking the right stock because there's no such thing as 100%. You can't swing 100% at this. But what you can do is get better at making a decision and detaching your emotions. The stock market is all about detaching your emotions. If you have emotions attached to it, it is very difficult to make an informed decision in these areas. So I choose to just cut my emotions off. Don't even let them play a role and just focus on the goal. Tell me if I'm right or wrong. Well, if I'm only going to do that, I'm only willing to literally put in 100 shares to find that out. Loading up on the beginning of that would be dangerous because there's a lot more information. So once I'm in a trade, then I start thinking to myself, now I can find out more information. I do also call, as I said before in previous message, I call the investor relation. And I call, and I want to see how many times when I call somebody gets back to me. I send an email because they have an email that they get back to me. If they're not willing to communicate with me on any one of those forums, I actually kind of say, oh, wait, time out here. You got investor relations, but you don't answer questions from investor relation. You don't even send a message to say, thank you for contacting us. We'll get back to you shortly. I've had that before. That has saved me from investing in companies because they never even communicated back. If you are actually an equity stake owner in that company, only own one share, rather own 100, and you can't even, before you buy, you should be able to call them. Does a number go to a person? Does it go to a desk? What's that person's name? If it is that person's name, write that person's name down. See how many times it takes and say, hey, it's me again, calling you. I've done that. Me again, I'm calling. This is my third time calling. This is my fourth time calling. Before I put more money in this and before I take a position, I like to get some information from you. And if they don't communicate, I don't buy it. I need to make sure that they're willing to do the one thing, because even if you own one share or you own no shares, what good is having a open department that says investor relations and nobody talks to you? That's not investor relations. That's a hole, and that's called the black hole. Nobody wants to mess around that hole because that means I'm just dumping money in a black hole, and I can't afford to do that. I need to make informed decisions, and I need to be able to make them on the ground, which means by looking at the local community and see how they interact with me and you and anyone else. At the end of the day, these may not be the three, but this is on my watch list. So far, the ones that's on my watch list, they have all moved to a point as of today, other than one stock, BBAI. I mean, that's that's only one, and that is going into that whole aspect. That's the only one I got concern of. Bear AI. That's the only one that's right now. I'm still doing my due diligence, pulling up some information, talking to some competition. That's the only one. The rest of them on the watch list have performed in a way that if I took a stake in any one of them, I've made some money. Literally, I made some money. Norwegian Cruise Line is still there. Carnival Cruise is still there. JetBlue even moved. That was something I had in earlier. So I'm still going through the process of making sure, and they're on the watch list. I'm getting ready. Next week will be interesting because I'm going to scrap everything on the watch list and start over. Literally, everything on the watch list, because I want to make sure that I'm continually practicing my craft, because you can get comfortable. You won't make a decision. So some of the stocks may be a little bit more. I'm going to tell you this. That doesn't mean I'm going to buy them, but I got to practice making sure I do all the follow through, because I am making these decisions for my own household. And if I'm wrong and I'm not trying to check in myself, that could be catastrophic. And if I don't do well at this, like, what's expected, then the consequence is I should look to go deal with a professional. That's never going to happen, but you might as well say it. Now, for some of you guys who go out there, you have professionals, keep those professionals. They work great. They'll help you out in your overall life. You'll sleep better. For me, I sleep good too, because I'm detached from the investment. These are opportunities for long-term income plays that I'll get paid, and it'll be part of my income. When I file my 1040, I'm expected every year to file this form with me. Now, the only time I don't add anything or take losses, because that's the one thing about equities you can't do with a mutual fund. I had to learn that the hard way. You cannot write off mutual funds, but you can write off, because mutual funds are not equity stake. But on my 8949 form, I definitely can write off all the equity stakes that I do have where there's a loss to take place, short-term losses. So that actually helps me reduce my income, especially once your kids get a certain age and you can't claim them no more. You need all the write-offs you can. But the legal law underneath when it comes to my account that I go to is I can't write off more than $3,000 of any position in a 12-month period. So that gives me $3,000 to bring down from my income, or $3,000. Well, if it's profit, then I'm not taking a loss anyway. So that's just added to my income. At the end of the day, you need to know these things. Definitely wanted to come out here today, let you know that I am looking at these three stocks. More information to come out. I'm happy to share that with you. One of the things that may not be as comfortable for everybody else is that I built confidence by going through this process. I mean, I'm putting myself out there. I'm building this confidence, whether anybody agrees or don't agree. This is positions that I'm taking that I love the feedback. Say something in the comments, say you're an idiot, say whatever you got to say. I may not answer you though, because there's an old saying, when a dog howls at the moon, nobody says anything. Nobody says anything. But if a person hollers at you, you respond. So I'm gonna be like the moon. So you can holler at me, say I'm crazy for what I do, but I'm gonna be like the moon because some things don't need to be addressed. That's the way I look at it. Again, if you haven't had a chance to look at Monday's show, definitely go ahead and watch that. That was on Monday, where you can't put your ATM card in all ATMs. Don't you know why you can't put your ATM card in all ATMs? Coming up on Friday, one of the other interesting things is we're gonna have a good conversation with our film side. So that's our part. But Monday, Tuesday, and then I got some things for the members section that they would definitely enjoy, just on business itself. That way we can all make sure that we continue to do things that actually help our families, then hurt our families. But when it comes to building wealth, remember this: you cannot end up at the Economic World Forum in Davos unless you're willing to go out and do some of the things that other people don't do. Now, it doesn't mean it always got to be moral, legally, and ethical. So I'm not asking anybody to do anything that's not moral, legal, and ethical. But I am asking you to make sure that you understand that as people get older, there's going to be more demand and nothing's getting cheaper. So now is the time. Now is the time to be able to hone your craft. I mean, once you get out of school, you don't have anybody else to push you. Well, pushes me because I'm constantly learning, I'm constantly adjusting, I'm constantly talking to people. If I'm not talking to you guys back and forth just on the chat side, I am having conversations with the companies I'm looking at, and I'm talking to the neighbors. I want to make sure that these businesses are operating well, and I missed the Chipotle, the Starbucks. I didn't ever take a stake in any type of Burger King or McDonald's. They were too expensive at the time. Everything is based on what I have access to. I'm not really big on investing in stocks and buying 2 or 3 shares. I like to buy 100. I have, though, people have asked me, have you ever bought? Yes, I have bought 1 or 2 shares before, just so you know. I have bought 1 or 2 shares before. I rather not do that, to be quite honest with you, but I have bought 1 or 2 shares before because I made a boo-boo, and then by the part of it didn't all get filled. So it closed, the market closed, and they only filled half of mine. So I had to come back and buy 50, those type of situations. But overall, I don't try to go out. If I can buy 100 shares, 100% in the deal. You know, that's one of my little pet peeves, 100% in the deal, and allows me to also get in and also get out at 100%. So these are the things that I do. I want to thank you guys for coming on today and giving me the opportunity to share with you my thoughts, my actions. And don't forget to like, subscribe, comment, give the thumbs up, share the video. I'll see you next Wednesday. You guys have a great day.